Be Wealthy and Smart, episode 1545.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is there a rate cut coming in September due to the inflation numbers seeming to be under control? The Consumer Price Index accelerated slightly less than expected in July on an annual basis and increased a seasonally adjusted 0.2% for the month and 2.7% on a 12-month basis, according to the Bureau of Labor Statistics. Dow Jones estimates had been for 0.2%, so right on target with the actual number, and 2.8%, 0.1% above the actual number. Excluding food and energy, the core CPI increased 0.3% for the month and 3.1% from a year ago, compared with the forecasts, which were 0.3% right on target and 3%. So the actual was 0.1% above the estimate. Officials generally consider core inflation to be a better reading for longer-term trends, and the monthly core rate was the biggest increase since January, while the annual rate was the highest since February. That was due to 0.2% increase in shelter costs, while food and energy fell 1.1%. Vehicle prices were unchanged, though used cars and trucks saw a 0.5% jump. Transportation and medical care services both were 0.8% higher. This was a bit surprising because people were expecting tariffs to perhaps cause more inflation, but they did show up in several categories. For instance, household furnishings and supplies showed a 0.7% increase after rising 1% in June, but apparel prices were up just 0.1%, and core commodity prices increased just 0.2%. Canned fruits and vegetables, which generally are imported, are also sensitive to tariffs, and they had no change. Ellen Zentner, chief economic strategist for Morgan Stanley Wealth Management, said inflation is on the rise, but it didn't increase as much as some people feared. In the short term, markets will likely embrace these numbers because they should allow the Fed to focus on labor market weakness and keep a September rate cut on the table. Longer term, we haven't seen the end of rising prices as tariffs continue to work their way through the economy. Yeah, I think people are wondering whether tariffs are going to be a one-time price increase or an extended addition to inflation. Meanwhile, futures are pointing to a Fed rate cut in September. Traders are implying the odds are about 67% for a rate cut of a quarter point in September, up from 55% the day before. Now, the CPI is not the Fed's primary inflation forecast tool. They like to use the Personal Consumption Expenditures Price Index, but the CPI and the Producer Price Index feed into the Personal Consumption Expenditures Price Index, and that number is due out tomorrow. So we'll get that very big data point tomorrow, and that will either further solidify a possible interest rate cut in September, or, if the inflation is higher than expected, could take it off the table by the Fed. We'll continue monitoring the situation and reporting back to you. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.